Hey, welcome to the From Chaos to Clarity Unleash Your Business Potential podcast. I am your host, Sonja Jones of GIP Financials, your Mr. Miyagi of Money. And today we are talking about the C word. Now, I know what you're thinking. This is a podcast about accounting, bookkeeping. So, of course, the C word is cash, right? Survey says, wrong. We are talking about the other C word that's important for entrepreneurs, which is compliance. So every entrepreneur needs to know what money tasks they should be focused on a monthly basis, on a quarterly basis, and on an annual basis. So we're going to cover a few of those things on this episode. So go get your notebook, go get a pen, and meet me on the other side. Let's get into it. Let's go. All right, so you got your pen and paper. We're about to get into this compliance deal. So I hope that you guys are ready to know your numbers. So the reason why I wanted to talk about this, because we are now at the date of this podcast, we are in September 2024. So we are in the middle of quarter 3. Okay. And so this will be a good time for us to start talking about, hey, we got about 9, 10, 11, 12, 3 and maybe half, a little bit over half, 3 and 3/4, 3.75 months of 2024 remaining. So we need to go ahead and start thinking about what we need to do to get caught up. All right. So I want to share with you some monthly tasks you should be thinking about as far as your money. Okay. Your quarterly task as well as your annual task. Now, some of these tasks may not apply to you, right? Because I want to talk about with our for-profits, our service-based businesses, our e-commerce product-based businesses, and also some things for our nonprofits as well, right? So let us get into it. I got my notes here. So let me do what I do, right? Let me cook, as the young people would say. So let's talk about the monthly task, right? So of course, with your monthly task, we always talk about the monthly financial close. So that's your bookkeeping. So what does that look like? Categorizing your income, categorizing your transactions. Okay. Next thing you're going to do is reconcile your bank accounts, whether it's your checking account, your savings account, any accounts where you're actively using those funds for business activity. That also includes your maybe your lines of credit or your credit cards. Okay, those accounts have to be reconciled. And again, the word reconciliation is just another word for match. Okay, so you just want to make sure that all the transactions that are in your accounting software or in your spreadsheet match the transactions that are on your credit card statement, your savings account statement, checking account statement, and the like. Okay. And also don't forget to include like those bank fees that you have to assess, right? Because those are deductible expenses. Okay. So those are, just the baseline monthly expenses, but some other things to definitely be aware of. If you are e-commerce person, sales tax is definitely going to be something that in most states you have to remit or pay on a monthly basis. Check with your state's Department of Revenue for more information on that, okay, because you don't want to get behind. Another thing, and this goes for either e-commerce or service-based businesses, accounts payable and accounts receivable, right? So with accounts payable, that's kind of like your bill pay, those bills that you have to pay on a monthly basis. Always check that those expenses are, whether you got auto pay, if they're, being deducted on a monthly basis. Not just to check to see if you paid them, but also to check and see if there are any increases. Maybe, because the tech be teching, those vendors may, take out multiple payments on accident. So you always have to be, checking on those things just to make sure everything is good. If you're still writing checks, you want to make sure that those checks have cleared, right? So you don't have any checks just out there lingering out there. So if you are still writing checks and those checks have not cleared, make sure you reach out to the people who you paid to make sure that they've actually accessed the check, right? And they received it. For accounts receivable, those are the monies coming into you. If you are issuing invoices, right? One, make sure that you have a assigned term, meaning how long does your customer have to pay you, whether it's a net 30, meaning they have 30 days from the date of the receipt, net 15, net 10, however you do it. It's fine. Just make sure that you know, have that term on there. Sometimes you can just do, like in QuickBooks, you have the term due upon receipt. Okay. You can definitely do that. Just make sure whatever term that you set, make sure you honor it. So look, if you got a customer and you giving them an invoice and it says net 30, don't be a bugaboo and start hounding them after 7 days. You gave them 30 days. If you want to send a friendly reminder to say, hey, you got this outstanding invoice, fine. But technically, you really shouldn't be contacting them about that payment until day 31. Okay. Of course, like I said, you can send some appropriate friendly reminders, but we're not going to be bugaboos. If that's the case, you need to change your, or two things. You need to change your term and check your cash flow. Okay. So that's accounts payable and accounts receivable. And then most importantly, your reporting. So after you categorize and reconcile, pull your profit and loss, pull your balance sheet, pull your cash flow statement. So the profit and loss is what you're checking for, is to see if you had more income than expenses. Did you sell more than you spent out? That's pretty much what we're looking at. If you did, great. Keep going. If you didn't, we need to figure out what happened, right? See if there's some ways we can adjust the spending or find some strategies to increase the income. For your balance sheet, you want to make sure that that's the purpose of the reconciliation, is to make sure that those balance sheets are accurate. So for the balance sheet, especially if you're running it in accounting software, if it's ending like say August 31st, the checking account or whatever your accounts are, that amount should reflect the ending balance on that respective statement. That's what the balance sheet should show, whether it's a checking account, savings account, or credit card or line of credit. Anything that has to be reconciled. Your inventory, if you have a good tracking of your inventory to see, it should be under the assets, how much of your inventory that you have on hand and how much is worth, the wholesale value of it. Trying to think of another thing. Also for your, again, your liabilities, the things that you owe, your credit cards and stuff, those balances should reflect the ending balance on that statement. Okay. And then also make sure that you also deduct the interest expense on those credit cards, any fees, credit card fees, interest, like some like Amex has, membership renewal fees and stuff like that. Those things are deductible as well. So make sure that you account for those in your accounting. And then your cash flow is going to let you know where your cash is going every month. So just make sure that you track that as well. Now, your cash flow statement is not always going to be exactly like the available balance on your bank statement. So just make sure to be aware of that. It should be fairly close to it. Okay. So it should reflect like how much, like on your bank statement, how much you spent, like with your withdrawals, deposits, withdrawals, the whole thing. It should kind of reflect that, and possibly even the amount that you spend on your profit and loss. They should be kind of in the same ballpark. Okay, it really just depends. But then also, I have to take into consideration too the type of accounting that you're doing, whether it's cash or accrual, We'll talk about that in another episode. All right. But just for the general part, cash flow statement, check and make sure that you have, the amount of cash that's flowing and to see where your cash is actually going. And on a typical cash flow statement, most of your cash should be going to the general day-to-day operations, for the most part. Okay, next thing would be like your financing activities, like your loans, lines of credit. And then if you have a business that where maybe you have some investing products, like if you got some profit you want to invest it in a CD, or you're investing in a whole nother business, right? Those are what we call investing activities. So that's kind of like the basics of your cash flow statement. So the reporting is also important. So again, let me run back through your monthly checklist. So your bookkeeping, categorizing your income and expenses, reconciling your accounts, make sure that you check your State Department of Revenue for sales tax, check your accounts payable, the people that you pay money to, make sure everybody's gotten paid, make sure that they've all been paid the agreed amount. For accounts receivable, your customers, make sure that they're paying you on time and that you're tracking your invoice terms, right? And last but not least, for your monthly compliance, running those reports, your profit and loss, your balance sheet, and your cash flow statement. Okay, so that's monthly. Let's talk about quarterly compliance. Now, for your quarterly compliance, this would be primarily kind of doing like, for lack of a better term, a review or forecast, right? Doing a review to forecast. Let me say it that way. So if you're doing your bookkeeping on a monthly basis, your quarterly review should be pretty accurate. So now you're just looking for trends. Like, so for right now, we're in quarter 3. You should have already reviewed quarter 1 and quarter 2, right? So you're looking at from January to June. And you're looking at your income patterns. What worked in which months, what didn't work, right? If you had any promos, any like sales, if you went to any conferences, did any pop-ups, things like that, it should reflect in your sales income. If you ran a Facebook ad, things like that. If you had any, if you hired anybody or if you did any extra investments, right, during that time, you should be able to kind of see how that affected your return on investment. Because sometimes if you're hiring like a social media person to run said ad, it should reflect in your income, right? That's the proper return on investment. Or maybe you're starting to delegate tasks and you've hired a VA, right? You should be able, although your expenses have gone up, it should reflect somewhere maybe in your income to say, if I hired a VA, I freed myself up to, start working on some more revenue generating activity, right? So it should reflect in your income, those types of things. So be looking at those trends. And with that, if you know that January to June went a certain way, then you should have enough information to forecast for the remainder of the year. Okay. Basically, what I like to do, very simple way to do it is just take an average, right? If you get all your income from January to June, just do an average of what those amounts are and then forecast that out for the rest of the year. Okay. If you have expenses, do an average, forecast that out for the rest of the year. Me personally, I like to be a little bit more conservative with my income, right? So I like, say if I'm forecasting about $5,000 a month, I might want to shave it down a little bit, possibly. Or if I already know kind of when my slow months are going to be in my particular industry, I might want to, adjust it a little bit. As well as like with my expenses, if you know that, especially with subscriptions, if some subscriptions automatically renew within a certain amount of time, or if you already have gotten a heads up from a vendor that effective Quarter 4, the price is going to go up. You can go ahead and start budgeting those things out. Okay, so that's kind of how you can do a quick and easy forecast, which is easily justifiable. You're just doing an average, and you can go back in there and tweak it as you need to, right? That's how you do that. Another thing for your quarterly compliance is going to be your estimated income tax. If your tax preparer suggests that you do that, if you are an LLC, particularly, meaning that when I say that you have a business that's generating consistent income, particularly consistent profits as well. If you're running that P&L and every month you got a profit on a quarterly basis, you should be making a contribution to what they call the EFTPS, right, system in the IRS, making a quarterly tax payments, because what you don't want to have happen in January, February, when it's time to file your tax, you don't get bopped upside the head with a big tax bill, right? This is another reason why the cash flow is so important, so you can have some reserves set aside, right, to pay these things. So when you're thinking about your profit, that's not just money in your pocket. You got to, think about how you're going to preserve those funds, because you got taxes to pay, you got more inventory to buy, you got people you have to pay on your payroll, things like that. It's always good to just have some money set aside for those said things. Okay. And then lastly, payroll tax. If you got staff, and specifically, can't talk today, specifically W-2 employees, right? If you're running your payroll through a particular payroll company, which I'm praying that you are, right? If you have employees and you're running payroll, please make sure that those payroll companies are electronically filing your taxes for you. That's the whole purpose of subscribing to a payroll vendor. Just saying, if they're not doing that, basically wasting your money. So make sure that you are checking every quarter to make sure that your payroll platform is quarterly paying out those payroll taxes. So federally, that's going to be your 941. And then also with your respective state, your unemployment tax should be going to your Department of Revenue, Department of Labor, unemployment going to the Department of Labor. And then if your state has income tax, that should be going to your Department of Revenue. But your payroll company should be taking care of all of that. Okay. So quarterly, let's run it back again. You're going to take your profit and loss, your balance sheet, your cash flow statement, look at them on a quarterly basis and do some trends. Do forecasting for the rest of the year. Take the average that you're receiving in income, the average of what you're spending in expenses, and forecast that out. Your estimated income tax. If your business is generating a profit, even within that quarter, maybe you had 2 profitable months and a month of loss. At the end of the day, you should still have a profit. Whatever profit you made from quarter 1, you would pay that, to the IRS. Quarter 2, you would pay that to the IRS, right? That's a best practice, and you can't do that unless you got cash reserves. So please, please, please do that. So when tax time comes, you will not go through any sticker shock. And lastly, payroll taxes. If you are paying employees, make sure that you are investing in a payroll platform that will electronically file those taxes for you. Okay, so we got monthly and quarterly. I'm going to pause for the calls right here. We got a quick commercial break because I got something exciting that we want to talk about that's coming up soon, and you don't want to miss out on that. So check out this commercial, y'all. Hey, entrepreneur, I know managing your books is overwhelming. You don't know where the numbers begin or where they end, which keeps you getting denied for grants and loans. Let's not forget the unexpected tax bills because you weren't aware of the tax deductions. So if you're thinking whether or not to close your business just because you can't find anyone that you trust to help you with your bookkeeping, you're not alone. 70% of entrepreneurs don't have a financial expert. And of that 70%, 64% admit to not knowing the basics. I'm Sonja Jones with GIP Financials, and I'm here to invite you to our online community, GIP Academy. So what is GIP Academy? It's affordable access to bookkeeping experts. For only $97 a month, you'll receive our online library of webinars, monthly live teaching with other experts, and quarterly one-on-one support. It's a safe space for entrepreneurs to talk about money and get the answers you need to make your business profitable. So, if you're ready to know your numbers, if you're ready to get approved for funding, and most importantly, if you're ready to finally pay yourself from your business, click the link in the description below to join our wait list and get updates before the October 1st launch. I look forward to partnering with you. Let's get it. All right. So I hope that you are thinking about GIP Academy. I'm excited about it. So let's get into the last thing that we're talking about here, which is your annual compliance. Your annual compliance. So we talked about monthly, talked about quarterly. Now let's talk about annually. So if you've done everything that we've talked about, you've been doing your bookkeeping every month, you've been forecasting every quarter, the annual should be no problem, right? Your profit and loss should be already ready for your tax preparer. You just got to print that thing out, pass it on to him or her, your balance sheet, pass it to him or her. They don't need your cash flow statement, just your profit and loss, and possibly your balance sheet if you have assets or anything that needs to be depreciated. Okay. I think the most important part here, in addition to like your bookkeeping, like your year-end reports and stuff like that, will be your federal tax return, of course, and then also your state compliance task. I know in the state of Tennessee, two of the annual tasks that you have are, well, actually three, your business tax. And basically, the purpose of the business tax in the state of Tennessee is for you to renew your business license. That's pretty much for everybody. Okay. If you have an LLC, your articles of organization, your renewal fee, right? Your annual fee, that's going to be renewed every year at the same time, April 15th. And then also, if you are LLC or corporation, you got your franchise and excise tax. That's going to be due at the same time, April 15th, which you can file an extension for the F&E tax as well. But just know it's very much like your federal taxes. Just because you file an extension doesn't mean that you won't be, penalized interest and things like that, especially if you owe. So just know that they're just giving you time to file it, but technically it's still late. All right. And then we cannot talk about annual compliance if we don't talk about the W-2s and the 1099s. Y'all, if you don't have employees, this really doesn't, apply to you as far as the W-2 is concerned, right? Because remember I talked about that payroll company that you invested in. If you invested in that payroll company, guess who should be doing your W-2s? They are. And what they should be doing for you every quarter, they should be giving you some type of like, hey, this is what we have as far as your employees, your gross wages, things like that. Kind of giving you a preview of what the W-2 will look like near the end of the year. So just keep your eyeballs glued to your email inbox, because your payroll provider will start letting you know, like, hey, check your W-2s, make sure they look good, because if we need to adjust them, we still got time to adjust them, because they're going to give you a deadline. And if you don't abide by that deadline, they're going to go ahead and start, printing out the W-2s, the final draft of the W-2s, and start mailing stuff out to your employees. So be on the lookout for that, so you can do your official blessing of the W-2s, make sure everything is in compliance. Now let's talk about the cotton picking 1099s. Now this goes for everybody, nonprofits too. If you are paying another business to do business with your business and you have paid them over $600, you, ma'am, you, sir, have to issue them a 1099. Now, you cannot issue them the 1099 unless you have received from said vendor the W-9. Okay? I would implore you to make this a best practice. Do not give a new vendor any type of payment unless they complete a W-9. Okay? Of course, there are going to be some companies that say, hey, we don't have to do the W-9 because of this, that, and the third. You better confirm that because people are not integral. So I'm just saying. In some cases, there will be like if a business is a corporation, right? They won't have to do a 1099. I'm trying to think of if your like say if you have a brick and mortar and the brick and mortar you're renting out the place and the place is run by a property management, right? Meaning the property management is running it for said owner. Okay. The property management won't get the 1099. It's actually going to be the owner who gets the 1099. So make sure you work that out with them. In a lot of cases, what will happen is the property management will issue the 1099 to the property owner. Okay, so just confirm that, especially if you are renting out space somewhere. So just confirm that. And then also, if you are a nonprofit, because we're talking about, tax statements, make sure that you're filing your 990. If you make enough money to do where you have to do an audit sometimes, if you're receiving grant funds, nonprofits, your grantors will require that you have an independent audit review done. So just make sure before you accept those funds, know what you're getting into. Right? So nonprofit, you also have to make sure that you are abiding by your stuff as well. And remember, nonprofits, you have to file a 990 every year to maintain your 501c3 status. If you don't do that consistently for 3 years, you run the risk of losing your exemption status. Please don't do that. Okay, so make sure that you're taking care of that business. And also nonprofits with your particular state, you have to also do your annual fee as well for your entity. So make sure you're taking care of that. But those are your monthly, quarterly, and annual compliance tasks. Of course, these aren't all of them, but these are the most common ones that most of our clients have to go through. So make sure that you are adhering to those. Go back to the beginning, write out, a checklist if you need to, and take care of that. Of course, we will be, unpacking this more in GIP Academy, which is coming out October the 1st. Make sure that you get in where you fit in, entrepreneurs. You do not have to know your numbers by yourself. We have a full-fledged library and community where we're going to be helping entrepreneurs know their numbers the right way. Okay, so that's going to include an online library where you have access to all of our previously recorded workshops and our signature workshops. We will also be doing monthly Q&A live teaching in the group, and every member of the community will get not free, but it's included in the subscription, one-to-one quarterly coaching, because as you're doing your bookkeeping, we want to make sure that we put eyes on your numbers to make sure that you're moving in the right direction. Okay. So GIP Academy is where it's at, y'all. It gets no better than this. We are so excited to be able to serve entrepreneurs in this way. It's going to be phenomenal. We are so excited. So That's all, folks. I hope you enjoyed the episode. Again, I'm Sonja Jones of GIP Financial, your Mr. Miyaki of Money. So I will catch you on the next episode. Make sure that you do all the things like subscribe, and all, share all that. But you're going to see it on the outro anyway. All right. I'll see y'all later. Bye. Hey, y'all. Thanks so much for tuning in to the From Chaos to Clarity Unleash Your Business Potential podcast. Again, my name is Sonja Jones of GIP Financials, your Mr. Miyaki of Money. And look, if you learned something from this episode, don't keep it to yourself. Make sure that you like, that you subscribe. If you have some little nuggets, add some comments to the comment section of this podcast. But most importantly, I want you to share it with your fellow entrepreneurs. We want to share this good old fundamental business finance education so you can have the tools necessary to know your numbers and grow your business. All right. Take care, y'all. I'll catch you on the next episode.